What's going on, YouTube? Welcome back to the Goofy Investing channel, where we talk about investing in the stock market. Welcome to the underground. This is a small channel. Feel like I've been out a while. Here we are. We're going to look at a small cap company in the oil and gas industry per subscriber's request. This is going to be a video on PARXF Resources Incorporated, ticker PARXF. As you can see, market cap here is looking like 921.73 million. Dividend yield here of 12%. Dividend rate is $1.11. That is over that 10% mark. We're going to look at some financials, talk a little bit about the business model, and so forth. All right, so this is a Canadian company, all right? Headquartered in Canada. They do business mainly in Colombia. All right, so they are oil and gas exploration and production operations located in Colombia. So there's something to be said there. You can make money off international companies in different sectors, but you have to consider the actual political landscape, the geographics, customer base, etc. Customer base, I'm not so worried about because this is oil and gas. Everybody needs it, and most of it is through import and export around the world anyway. Good things that I think about when it comes to oil and gas exploration in Colombia is probably cheap labor. All right, cost of labor is dramatically cheaper there. They probably have, and they do have untapped, well, now it's tapped now because of this company, but there is patches of oil there that have been untapped that this company pretty much in their exploration piece decided to pursue. Now, this company is a shareholder oriented company. I did listen to the earnings call and I figured out what's going on with this company. Trading, mind you, trading at a PE of 3. You don't see that every day. All right. Let's look at valuation. Sector median for PEs on a trailing aspect are 11.83. This company's trading at a 3. From a sales metric, a lot of these other oil and gas exploration companies are trading at a 2 price to sales, while this company's trading at 0.71. We'll look over down to the balance sheet, real sneak peek. 119 million in cash and 55 million in debt. So they have net cash position of about 50 grand, a little over 50 grand, look like 60,000 or 60 million. 60 million, numbers in the millions. So net cash, let's look at dividend history. Looks like they have been growing the dividend for 2 years. Let's look at the actual history of payouts. Started this dividend in 2021 and looks like it's grown since, but not to have consistent growth, more of a cyclical, I'm going to pay you out type of idea. Fat dividends nonetheless. We'll look at price to dividend history. Stock seems flat. It's been trading around this, $10 range for a while. Since, 2007? Looked like an IPO a little above $12 and stock is under $10 today, all right? But that doesn't necessarily mean it's a bad investment now. This might be a thing where you have to look at your time horizon. Let's look at some more financials. Revenues seem to be increasing, all right? We see good revenue growth, probably due to their exploration of operations. Income from operations looks cyclical. I would expect nothing less from a company like this that dabbles in deep oil well drilling. Net incomes look good, a little cyclical cyclicality, if you will. If you've been following my channel for a bit, you'll notice that my philosophy is if you have these cyclical companies, dividends and buybacks are a way to show continuity, all right, to shareholders. So if you're going to hold something long term, dividends and buybacks on these cyclical companies can be a thing, all right. Let's look at, speaking of buybacks, let's look at diluted weighted average shares outstanding. All right, we'll go back. Looks like 2018, they had about 160 million shares. Now they got 104 million shares on the market. Impressive buybacks, very aggressive buybacks. And that's probably what's been keeping this stock price afloat. Yeah, of course, there's some up and down from $20 to $10 range on volatility, but the buybacks are really just starting to stabilize and help create that floor and resistance for the actual stock itself. Let's look at actual charting, an S&P 500 comparison. If you're investing in this company, when it comes to growth on a 10-year aspect, underperforming the S&P 500, but arguably if you're investing in this company, you're not trying to outperform the S&P, you're trying to get income, all right? With the actual buyback rate and the rate of which they're buying back stock and the magnitude of this buyback range, okay, I can see this equity being flat for, at that 10 to 20 range. I could see this equity being flat around that range for the next 15 years, right? In fact, operationally speaking, let's talk about some of their operational business model. I went into their presentation, looked at their earnings call. Why is this stock trading so cheap compared to sector median? Well, I'll tell you why. All right, they got some issues here with the Oroka segment, which is a portion of their business model in their portfolio, which they have been trying to tap into. They had the initial launch of it, and this deep well drilling, I assess it as both a science and an art. It's an art in the aspect of you got to know what you're doing, and it's a science in the aspect of the landfill and the minerals. The minerals got to just be at the right levels, and then the resistance of those minerals as averse to where the oil is, and a lot of that type of geographics kick in because you're doing some deep well drilling. A lot of things can go wrong, so you need some luck on top of the operations on the launch to actually strike the oil. All right. Both medically, both on, not medically, but both on a metaphoric aspect and quite a literal aspect, okay? You need some luck for this to work out. And there's a lot of things that can go wrong in these segments. Additional risks on this business model for this company that I assess, geopolitical, social, aspects of the country of Colombia being a socialist state. They could raise taxes on export of barrels of oil, which could impact this business model. Another risk that I see with this company is natural disaster risks. Yeah, I mean, they got, hurricane can come in because some of these landfills are right on the edge of a continent. So hurricane can come in and just destroy a lot of things, disrupt a lot of operations, cost shareholders some money. And so forth. So that on top of the operational risk of the actual art and science of getting in there and getting lucky as well. Some luck is involved. So if you're an investor that likes consistent growing dividends, this might not be the play for you. If you're an investor that doesn't really care when the influxes of cash flows come in randomly and they come in and start hitting hard when they do, that might be something, that you'd be interested in. With the actual PARXF on operations, according to their earnings, it's going to have revenue decline and flattening out for the rest of the year. and they're going to start their exploration relaunch probably in the second half of next year. With that uncertainty and that pause of operations, they decided to do fat dividends and buybacks. More of a you get paid to wait type of an idea, which is an okay strategy. All right, I don't knock it. Some investors like that. Some investors like to get paid to wait, and then later on they're okay with the growth kicking in later. With their relaunch of oil exploration, this stock can go to $5 if something goes wrong. All right, let's not kid ourselves. But there's good odds that this thing goes and retracts back to $20 with commodity prices increasing in that oil gas range. And, with execution and increased revenue, with an under depressed valuation, stock can double real quick too. All right. With the actual share float going down there and at the pressure at which they've been buying back this stock, it's possible that it can get to the point where the management can do a leveraged buyout and take this company private. I wouldn't be surprised in 20 years if that happens. In the event that happens, they buy back, they buy out all the free float, and the shareholders that vote on their brokerages, typically they get taken private too with the company, and this thing gets taken off the market. Dividends don't hit the actual brokerage. You probably get literal direct deposit checks from the company into your checking account, that type of idea. So these shareholders may turn into private equity company shareholders, if you will. So that's something to consider. Me personally, I like consolidation. If I have a business, maybe it's one that I'm running and I'm the CEO that's private, in a private business. I like to hold more public equities. I don't like to be too involved with operations. Call me lazy. I like to sit back. All right. I like to just buy the equities and sit back. All right. And participate that way. Now, that's a lot of my take on PARXF Resources. Their actual, listen, everything has been done under the sun. It's how it's done that's different. All right. So different companies have different ways of providing shareholder value. This company is no different. So if they want to jolt a segment of time to where they're doing heavy dividends and buybacks and then shift focus to growth, they can do that. All right. And that's to be expected. I wouldn't be surprised if this dividend gets cut and those resources of that capital gets reallocated towards the next phase of growth. That's where the risk is going to be. All right. Probably maintain the share buybacks. I looked at their share buyback history, and they're pretty dedicated to the buyback. And the dividends, a couple years they've been paying it out. They're not as dedicated to the dividends. Those are more towards an interim timepiece to where, okay, operations have ceased right now, so let's do fat dividends, to help the shareholders out while they wait. All right. So that's the idea with this investment. Not a space that I'm particularly interested in. As people know, I'm not really interested in dividends right now. But hey, to each his own. There's people that they're solely just invested for it. This could be a play to where they maintain the dividend and the stock doubles, and maybe that's a good thing. All right. Do I assess this as a 10x? Well, if they continue the buyback and the short float, or the float continues to be diminished, we can see a flat range here. It can be a thing to where this stock trades in the $10 to $20 range for the next 15 years. And on year number 17 and 18, this thing 7x's because the float is not enough. All right. To where there's scarcity in the float. So there's a huge buying pressure with those buybacks starting to kick in dramatically. All right. When nobody else is willing to sell. So that's something to consider. Very possible. In fact, probably probable if they keep up with this buyback. That's what I got for this segment. if you like what you're hearing, you know, you're learning something, like and subscribe. Check out my Patreon, $5 a month. You get access to my hidden gem collection, be with like-minded investors, more direct access to me. You get access to actual Patreon promotionals ahead of time. Those are videos that go on my Patreon and then are scheduled for YouTube at a later viewing. So you get the inside scoop there. You also get to see different, you get to see live what I'm doing. You get live buy and sell alerts and so forth. It's pretty cool stuff. So check that out. Until the next time, I will be putting out a video shortly. So I'll see you soon.